Hello, and welcome back to Underdog Investing. Today we're going to talk about Pacific Biosciences. Firstly, going through some of the highlights of the earnings call yesterday, and that's not so great news, but then I'm going to go through two really good pieces of news, and then finally we're going to finish off by looking at the stock price. Okay, so before I jump in, I'll be grateful if you can smash that like button and subscribe to the channel for future updates. So let's have a look at the highlights from yesterday's earnings call. First of all, let's just note that we actually missed earnings quite significantly. So the estimated earnings per share was 0.43, but the reported was actually minus 0.01. So we missed it by about 100%. That's the first thing to note. So this is not so good news, but they do have basically an excuse or a reason for missing the earnings. So revenue for the fourth quarter so this time around was $27.1 million, which was a 42% increase compared to Q3 of 2020, which was $19.1 million. But it was a 3% decrease compared to last year's fourth quarter, which was $27.9 million. So that's pretty much a recurring theme this time around. So we did better than the last quarter, so Q3 of 2020, but we did worse than Q4 of 2019, which was a year ago. And so the same thing if we look at gross profit. This quarter we had a gross profit of 11.4 million, which was 61% higher than last quarter, which was 7.1 million, but 12% lower than the fourth quarter of 2019, which was $12.9 million. And so looking at gross margin, the same thing. So we had a gross margin of 42% in this quarter compared to 37% in the last quarter, but then in Q4 of 2019 we had a gross margin of 46%. If we have a look at the net income, that's quite interesting. So our net income this quarter was $74.9 million. That sounds like a lot, especially if you compared it to a net loss of $23.7 million in Q3 of 2020, and also a net loss of $0.1 million in Q4 of 2019. But there's a reason for that. Basically, Illumina paid Pacific Biosciences. It's due to the reverse termination fee of $98 million, which was paid in this quarter. Okay, so let's have a look at their reasoning for why we had a not so great quarter compared to last year. So impact of COVID-19 pandemic. Financial results for the 12 months of 2020 were negatively impacted as many of our customers in multiple regions around the world shut down operations for various periods of time in efforts to curb the spread of the COVID-19 pandemic. So this resulted in lower product revenues of $65.4 million in 2020 compared to $77.7 million in 2019. And what they're saying is this uncertainty can continue. So uncertainties associated with the pandemic, including recent resurgences in infection rates, may cause further impacts to our operations and financial results. So same thing with a lot of companies that have been affected by COVID, especially the genomic sector. So it's not just Pacific Biosciences. If you imagine the medical field, if we're trying to survive, we're not going to try and go for growth and innovation as much, which is similar to what's happening in terms of the pandemic. Okay, so that's the not so good news. Let's move on to two pieces of really good news that we heard recently. So the first one is the fact that $900 million is being invested by Japan's Softbank into Pacific Biosciences. And let's have a look at what the CEO, Christian Henry, has to say, and then we'll have a look at what the CEO of Softbank Management has to say. And if those of you don't know, basically Softbank is basically the god of artificial intelligence. So first of all, Pacific Biosciences President CEO Christian Henry commented, "This strategic investment by Softbank validates our leadership position in the long-read DNA sequencing market and enables us to further accelerate our growth strategies. Currently, we offer one of the most accurate and complete sequencing solutions on the market, and this financing will enable us to continue to expand our product portfolio and advance our commercial expansion as we seek to transform the field of genomics. So, if we have a look at what Softbank CEO Akshay Nahita says, we believe that Pacific Biosciences hi-fi sequencing will be the de facto standard tool for population genomics, fundamentally altering the practice of healthcare. Christian has assembled a world-class management team to commercialize market-leading sequencing technologies and to prepare population-scale healthcare systems for a future in precision medicine. We look forward to partnering with the company in its efforts to build the most advanced genome sequencing platform in the world. So Softbank, they are amazing, and the fact that they are so bullish on Pacific Biosciences is a massive plus for us, or for anyone who's invested in Pacific Biosciences. So that's the first piece of good news. The second one is the fact that Pacific Biosciences and INVITAE are actually joining forces and collaborating. It's kind of complicated what's actually going on in terms of what they're actually doing, but the way I look at it is essentially what they're doing is they're combining forces to try to innovate and drive down the cost of actually whole genome sequencing. And anytime I see something like this, it makes me very bullish and very optimistic. And the reason is because I compare it to a company like Tesla, who we know their mission is very clearly to advance the transition of this world into sustainable energy. And you can tell that Tesla was never a company which wanted to make a lot of money as their priority. Their priority was always focused on a mission to advance sustainable energy. And that actually led them to where they are now. And I feel like the money part and their crazy valuation was all a byproduct of their focus on their mission. And I feel like anytime you have a partnership like this, it shows that it's not just about competition. You can tell that these companies genuinely want to help each other to advance genomics and to advance healthcare, to save lives, to help the economy. I feel like when you've got a collaboration like this, you know that these guys are going to be the winners. And when they are the winners, I feel like the revenue is going to be a byproduct of their mission to improve healthcare. What they're doing is amazing. I mean, being able to drive down the cost of whole genome sequencing is the ultimate challenge in order to succeed in this field. So this makes me very bullish personally. So those are the two good news, and let's have a look at how the stock price reacted to this jumble of good and not so good news. So you can see today we are near the end of the trading day for Thursday the 11th of February, and we are trading at around $51, which is 11% up today. But what's even more exciting is if you have a look at the day before, we actually went up about 25% before retracing down slightly, but we ended up about 22% up for the day yesterday, and that's incredible. So you can see that although we didn't hit the earnings, the fact that we've had such significant optimistic news in terms of Softbank investing $900 million and with the INVITAE collaborating with PACB, this is all really bullish news. So the market is definitely responding to that. And we're actually up, in the last 5 days, we're up about 45%, which is incredible. Let's have a look at the 6-month chart. You can see the 6-month chart. So I actually started investing around this level, so around the $27 mark. So it's had a good 88% increase in the stock price, which is decent. But if you imagine, some of the people who've watched some of my previous videos have mentioned that they actually started investing around $8, which is incredible. That's a 5x in just 5 months. And imagine people who bought 6 months ago, that's actually a 10x almost. So 824% increase. I'd be curious to know, actually, anyone who's watching, whether or not you're invested in Pacific Biosciences and what was your entry price. That would be quite interesting to know. So at the moment, I think I'm just going to hold fire because I've already built a position. So what I would add personally, if I didn't have this position, I would personally probably get a small position now and dollar cost average. I think that's the best way to balance the risk of potentially, if I put all my money in now and then the market crashes, then I'm going to lose quite a lot of money. Whereas if I put a small amount now and dollar cost average, that will reduce my risk, and it will also prevent me from FOMOing, so having any fear of missing out. So that's what I would do if I didn't have a position currently. So that's the end of the video. If you enjoyed it, I'll be grateful if you can smash that like button and subscribe to the channel for future updates. I'd love to hear your thoughts in the comments section down below, and if you found it useful in any way, I'll be grateful if you can share this video. Thank you so much, and I'll see you in the next one.